You can use the arrow.
Oh, okay, use, okay, cool.
And no, the arrow to the right.
Okay, there it is. Okay, there we go. Okay, it's working. All right, so once again, good afternoon, everyone. My name is Frank Chu. I'm the mortgage manager here with Wells Fargo Home Mortgage. So thank you, Clara, for a quick introduction. And so all of you have heard Clara's presentation in regarding to our pre-approval process, more so our mortgage credit approval letters. So what I'm going to talk about today more so is a few of our niche type of specialty products here with Wells Fargo, okay? So I'll do it this way. Okay, so one of the biggest things that we do right now is new construction. So what we do here for new construction is everybody knows when the rates kind of go up, buyers love to have something that they can hedge. And is that the camera right there? Okay, so that they can hedge. So that way, here at Wells Fargo, we offer something called a, it's basically known as an extended lock, which we call it the builder best. It goes anywhere up to, scroll back over. That's good?
Mm-hmm.
Okay, oh, there it is. I'm sorry, I'm trying to look at where it is. So it's called builder best. So we can lock up to 365 days, so for a year or longer. However, our sweet spot in regarding to this particular new build construction is 180 days, 6 months, okay? And the way it works is this. And I'm kind of give you a summary of how the program on this presentation. Anything that really kind of jumps out or you'd like to learn more, please let us know. We'll be more than happy to come in and go more in depth on certain programs and product that we have in the future, okay? So on this particular program, our sweet spot is the 6 months lock or 180 days. The way it will work is that the customer will actually pay a half a point upfront. However, at the end, when the construction is done, they get that back. So there is no cost to that buyer for locking in today's rate. Now, the beauty of it is, let's say coming down in October, so 4 months later, 5 months later, you know, the rate went up higher. Guess what? They got today's best rate, right? Compared to 4 months from now. If 4 months later, let's say the rate drops to a better rate, the customer get a one-time free flow down, no cost to the customer. So in a way, they get a chance to hedge in regarding to how the interest rate fluctuation might be, because that home is not done. All right. So that's why it's in a nutshell. This is called the builder best. It's one of our most competitive program. When the rates are going up, it really kind of gives them that competitive advantage out there on the market. Okay. All right. So our other this is new construction. I just talked about the builder best extended rate lock and condos. So. And I'm going to go kind of quickly here on condos. So everybody knows right now with the housing prices where it is, there's a lot of condominiums coming on the market where, you know, buyers are trying to buy. Sometimes they run into issues because of, you know, meeting the agency requirements. And we all know that, right? Sometimes it could be a heartache or a deal breaker if that transaction doesn't go through. Certain instances, if this is a jumbo financing, here at Wells Fargo, we definitely follow the standard guidelines. However, we also do non-warrantable condos as well. So depending on the situation, you know, talk to one of our loan officers. They can run scenarios. Once we know the project information, we can run it with our condo department and figure out if this project is something that we might be able to take on. And if the project is already pre-approved, we actually can do a streamlined approval process on those condos. And when it's a short close of escrow, this could be a differentiator to really kind of help your buyer getting that transaction closed, okay? All right, dedicated home lending service. So I'm gonna kind of go through this a little bit faster. You know, with VA loans, veteran loans, we do a ton of that here at Wells Fargo. We have a dedicated channel that specializes just on VAs, all right? And with being in Southern California that we are, there is a ton of veteran opportunities, and sometimes they don't fully understand the full benefits. And one of our, we have a VA specialist. All they do is out there educate the realtors on how VA works. And believe it or not, they actually are a very unique group because, they all talk to each other. So a lot of times when you're trying to help one as a realtor, you can actually get opportunity with other veterans in that community. So one thing about us is if we bring us into the picture and we can educate how VA works, letting them understand what kind of benefit that they're entitled to for the service that they have provided, throughout the years, that bring us in. Let us talk about that. And you'll be surprised, it can go up to 100% financing. And the rate is really, fantastic in regarding to offering that for veterans. And we have a dedicated channel. Yes.
Ted, can you explain a little bit about what your appraisers are looking for when they're out there at VA? Because a lot of people assume they're going to require repair. Can you explain a little bit about that?
Sure. So obviously I'm not an appraiser, so I'm kind of giving general.
Yes.
So here at Wells Fargo, we utilizes 4 AMCs that basically all the major lenders will use just because of turn times, where the location is, and we want to provide that service. But to answer Michelle, right?
Yes.
To answer Michelle's question, it really will depend on how that appraiser looked at that property and what's on that report. We primarily look at, the safety and the health issues with that property. If this is non-safety or health, a lot of times our front-end underwriters can make decision on their end and move that file forward. But if this is health and safety issues, that will be a different story and can impact potential repairs that need to be done. And I have seen on not just VA, just in general, depending on the situation, we have done escrow holdbacks, we have done where the seller is kind of doing part of the repair and they're following up with that. So it is well-rounded in a way where each individual transaction is unique. So it's kind of hard for me to kind of give a direct answer. But if sometimes the appraiser, they're human beings just like all of us, sometimes they look at a report and it might not be the best of quality, just like anything else. We do have, or Clara does have a channel that they can submit it up and to have that report being reviewed. We literally have situations, to Michelle's point, where our senior appraiser underwriting looked at it and says, we deem this appraisal is defective, and we actually paid to order a new appraiser to come in. And then sometimes it resolves some of those issues, if you know what I mean. So appraisers are really busy. Sometimes they overlook things, or sometimes they don't even get back with us, just because they're independent contractors and there's only so much leverage we can have. But to answer your question, we have ways of working around trying to bring a solution to the table and figure out what to do, especially if those loans are going to be portfolioed with us. So that way we have even more tools in our tool belt to work with that, rather than just being on the agency or the GSEs. Okay, hopefully that answers your question. Okay, no problem. Another big part of our business is relo. We do a lot of relocation business, especially out here, and they call it the Silicon Beach area in LA, down in San Diego. So we have big corporations, they move around. Wells is one of the top relocation companies. And what Clara doesn't personally do those loans, but we have a team in the back. All they do all day long is relocation business. So she will intake the customer information, connect it with our relocation person, and they will take it and run with it, and they speak the relocation lingo, let's put it that way, to help those customers have a seamless transaction. So in that kind of instances, if you have a customer or if you do relocation business, please talk to Clara. She'll be more than happy to actually set up a call with our relocation specialist and kind of talk about this exact program on what Wells Fargo can do to help that customer go from where they are right now and relocating to a new location. Okay. All right. And this is another big program we have. It's called CMPP. It's a corporate mortgage bank benefit program. So Wells Fargo partners with a Fortune 100 companies out there. And what they do is, on certain company that you partner with, for example, I know that's on top of my head, AT&T, for example, and the customer works for AT&T. If the customer, let's say you bring into Clara will always look up it on the customer to see if they're part of this program. If they are, whatever the best rates and program that customer can get on top of that, because of the corporate relationship with Wells Fargo, they will actually get additional gift card coming into them as incentives, or they call it award, to actually help them. Believe it or not, just a little award because of working with Clara. Now that customer working at a big corporation can refer other customer to you, and so on and so forth. So not only is Clara getting an additional opportunity, you're also building relationship within certain corporations by working with us. And if you like to know certain companies, if they're part of this program, just give Clara the name. She'll look it up and tell, yep, this is the company we're partnering with. This is actually how much the benefit of working with Wells Fargo will be on top of other incentives that Clara can bring to the table. Okay. All right. So this is one of our most niche program, is called Union Plus program. So here in, not just in in the US, but in Southern California, we have a very large union customer base here in the States, and most of them doesn't even know that Wells Fargo offers something called Union Plus. So we actually have the contract with Union Privilege, and Union Privilege has relationship with a lot of union, firefighters union. They have it with police department. They have it with electrical workers. I mean, you name it, right? And the good thing about it is that not only is our Union Plus program, just like CMPP, I talked about the corporate mortgage benefit, not only they're going to get additional, gift award, they're also going to have protection because of being part of a union. So let's say if a union goes on strike, for example, their union benefits will kick in to actually help offset and pay for their mortgage payment. And that's huge. Because think about it, if I was a union member and you told me about this benefit and I go on, for example, the union goes on strike, it helps benefit me and my family. And I will remember you for referring this opportunity to me, because otherwise, if they don't know about it, this could be a lost cause, So it's so important that we understand about this particular program, just because all around us, if you ask those questions, are you a union member? You'll be surprised, because it's not just for the union member themselves, it's also their families too. They're also interconnected with this particular program. So it's huge. Okay, so if you're interested in learning more about this exclusive program, because there's no other lender out there offering this except Wells Fargo. So I'll tell you, there are some realtors that actually have partnered up with Wells Fargo to just focus on this program, and they have been invited into union halls and they're making presentation. And I'll tell you, that business is basic, that referral business is unbelievable how much opportunity can come out of it. So if this is something you're interested on, please let Clara know so we can see how to formulate an opportunity together. Okay. All right, thank you. So we talked about the VA, so I'm not going to spend additional time on it. And ultimately, we're talking about, kind of breaking down the summary of what's talking about the condo. One of the biggest thing, I don't think it talk about, no, it doesn't, non-conforming. So our jumbo loan, our portfolio loan is definitely one of our differentiator compared to other lenders out there, because number one, not only is the interest rate a lot better if the customer can bring in or has relationship with Wells Fargo. So we call something, it's not on here, but I'll just explain to everyone, it's called ARVR, which is our asset-based relationship discount. So what that does is that if a customer bring in, depository with Wells Fargo, they can potentially get an interest rate discount for that relationship. Up to a maximum of $1 million or 0.5% off on rates, not fee. So that's huge in regarding to the additional benefit they can bring to the table, where everyone else, like an agency loan, their rates is probably up here. We're probably looking at least a 1% variance on regarding to jumbo. Definitely talk to Clara. She can look it up, can give you the variance between the agency and our portfolio. Now, certain customers, especially out in San Gabriel Valley, if they actually have a high balance type of loan, potentially we can also get them into a non-conforming if it fits the box, So there is a lot of opportunities to really kind of help your customer, because I don't know about you, on $1 million transaction, every 8th in regarding to a rate variance, it's huge in regarding to qualification, right? So there's definitely a lot of benefit of talking to us about our portfolio product because it is, we don't sell those loans, we hold on to the paper. And so we look at if it's actually a customer that, it kind of meets our criteria. I can tell you, it really is second to none in regards to availability out there, okay? All right, so that's kind of on the type of programs we have. I just want to chime in a little bit on what Clara said earlier in regarding to her her three approval process. So out in kind of the industry right now, we have the pre-qualification letter, which I'm sure none of you use anymore because it's just a piece of paper. Or we have the pre-approval letter, right? Which everybody knows, they run a DU, they run an LP, all right? We do that here too. We call it PBL, priority buyer letters, okay? We run through the system. However, the next step up is called a full approval process. That is our MCAL, called Mortgage Credit Approval Letter. And those are something that 90% of the lender out there, they don't do it. It's not they don't want to, they just don't have the resources because it's actually an application. It goes into a full underwriter's hand to review the full loan and they give you a full commitment. Because once you have the commitment, all you need to do is order an appraisal and get the final items, you're ready for loan docs. You're ready to close. So we can close this transaction in less than 21 days. We have some transactions 14 days on a purchase where you're now competing against cash buyers because of that aspect. And because it's fully credit proof, Clara can call the listing agent and says, hey, I'm the actual loan officer. This loan is fully approved, fully vetted, ready to go. It's like a check that's going in with your offer. If you're willing to accept it, we'll push you through and get this thing closed for you ASAP. So she can also chime in to help kind of glue that transaction together, and then really working as a team to help that buyer, insure that property. So I just want to make sure I stress that a little bit because that's an area of differentiation between how well Clara can bring to the table and some other lenders out there. And this is 100% free of charge to the customer. There's no cost, no commitment from the customer. If they want to use Wells Fargo, that's great. If they don't want to use Wells Fargo, that's okay. But at least it gives Clara and Wells Fargo an opportunity to try to help that customer. But more so, it helps you, make you look good in front of that customer because you offer something that other folks just isn't able to offer. Okay, so I just want to take a moment. Yes.
Do you have any pre-approved appraiser that can do the appraisal for less than 2 weeks?
Pre-approval in less than 2
Yeah, the appraiser.
Appraisal.
The appraiser is so busy,
I
they
know.
get, I can't do it in, less than a month.
Yeah.
And then
Yeah.
a lot of times you want to ask for to be,
Yes.
readily
So-
closed. Do you have appraiser that you be approved for, that you can do appraiser for appraisals in 2 weeks?
So that's a great question. So this is what we do, and I'm going to try to explain it in ways that's short and simple for you to understand. So as I said, we have 4 AMCs that we partner with, and what we do is Clara will put in there a date of whatever the close of escrow or a contingency date, what that might be. She will put it in. She will order appraisal day 1 once that is come through. So in about 48 hours or so, they will assign out this transaction. So an appraisal, if they come back and says, oh, I can't have it to you for example, 3 weeks, we will look for the next appraisal on. We have a long list of appraisers that helps us get it done. And I'm not going to lie to you, in metropolitan areas like San Francisco here, we've been pretty lucky, knock on wood, that we're getting in pretty much within that time frame. It's where in the rural areas, it's been a little hard because it's kind of hard for them to get an appraiser. They're willing to drive out there. It's limited resources of just how many appraisers is out there. However, to answer your question, if it's in metropolitan, is in large cities, we have been pretty lucky. We've been, kind of getting in. I'm not going to lie to you. There has been, kind of pretty hectic situation where we're getting close, but they all transpired and got it in by that due date. Let's put it that way. But we have I can't talk to an appraiser, but we have a direct person that oversee the whole appraisal department. So that way, if there's an issue, he jumps on it and every few hours give us an update, kind of where we are. Because at the end of the day, I think this business is all about communication, right? The good, the bad, and the ugly. Let's talk about it, right? So we can address it and figure out a solution. But most of the time they're coming back. If they cannot do it within that time frame, the time we submit the application, they get that order and they check with all the appraisers around them, and they will come back to us and say, this time frame is not going to be realistic in the geography where it's at. This is the ETA, the best ETA we can get, and we pay a lot more money for rushes and things like that, and we absorb those costs. But even with rushes, sometimes they still can't get it back with that time frame. So they will tell you they will tell us this is the best time frame we're looking at, and we'll come back to you and says, hey, they check around, but they're still also working to see if somebody can come in earlier, and they will reassign appraisals as needed, because they understand the urgency of purchases and they don't want to not meet contingency dates or closing date because they already have this fully approved. So hopefully that kind of makes sense.
Okay, you cannot really give a fully approval until you have a specific property and do the appraisal, right? So how's it different from the other lenders? They're doing the same thing. They have the preliminary approval based on your income, based on your occupation, right?
Sure.
But they won't give you a final commitment until you have a specific property and do the appraisal report.
Correct.
So you have the same thing, why is it twice?
Well, a lot of the non-bank lenders, they don't even get into a full underwriting and get a loan number and limit. Because what we do is when it comes back, yes, we do have an appraisal. And here's the fun part. Some properties, let's say it's 850,000, whatever we put it in, they come back as, waiver. And sometimes we don't even need a full appraisal, and they were able to get it done. And always just have 3 or 4 items will go in for final, and in 48 hours, your loan is ready for final, commitment for loan docs. So to answer your question, yes, banks, they do offer this particular type of product, but a lot of times they don't like to do it because it takes a lot of time and at the same time resources away. But Wells Fargo right now is putting a lot of efforts on purchases. So we actually deviate off kind of 2 channels. We have to really focus on purchase channel and the refinance channel. Because a lot of banks, they kind of put all into the same bucket and, okay, let's try to get it done, right? We've done that in the past, but right now with the market shifting, we actually created 2 separate channels. And our purchase channels now is, hey, if you have a purchase coming in, let us know, we'll rush it through, because we want to meet COEs and contingencies. And they actually are working backwards. They're lack of a better word, I don't want to use the word harassing, but they will call the customer and says, hey, when can you get the documentation to us? I'm ready for final approval. I just need one more thing, right? And they are very proactive now trying to get that in because we understand we have to meet those closings. So
and the buyer has to pay the appraisal fee.
The upfront fee?
Appraisal fee.
Yeah, we call it upfront fee that they pay upfront. Yeah, and then if it comes in as a waiver, then obviously there's no appraisal. But yes, they will pay that upfront, and then that will just be part of our loan application. But even for refinances, they also do the same. So
no, but the buyer has to pay first, right?
Yes.
Not the bank.
Yeah. The buyer, all of our loans, regardless of refinance or purchase, the buyer pay everything upfront. That's right.
So what if the loan you don't approve the loan finally?
Well, that's what, if we do MCAL approval, I mean, pretty much their credit income, right, and assets, those are already done. The only thing that can probably hinder the transaction would be the appraisal issue, right? Or a problem with the property or title or something like that. That's, obviously none of us will know, right?
Or the borrower changed the job, or they lost the job.
Oh, we have that too, yeah. They got everything approved and last minute said, what? You don't work there anymore? Oh, I forgot to tell you. Yeah, I'm no longer with the company. It's like, okay, it does happen. I'll be honest with you. But that's just the way it is. But the only, I would say, part of it that we can't control is the actual subject property, because nobody knows what that property is when we start the application. And that's, I think you brought up a good point is, it's important. That's why when you're talking to a customer to see if they're committed, right? Send them over to Clara first, right? When you're starting the conversation, get her be part of that conversation. And she will send we call it online mortgage application, send approval. She can start the process. Once you have that customer approved, chances are that, because customer, we all know nowadays are very slippery, right? So what is the best way to help, kind of put that connection together is looping her in. If she can get that customer fully approved, chances are for that customer to go to somebody else, it's going to be a lot less because they're already fully approved. They just need to find the property, So it created that triangle that we are always trying to link up. And you won't believe how many times like our loan officer called the listing agent, explain like, hey, this customer has been working here for this long, they're fully approved, ready to go. If you're willing to give them the chance, to actually get into escrow. We actually have won some transactions because of that commitment that they brought in. So that's what I'm trying to explain, where it kind of glue everybody together. But let's get her in early, because if you try to get her in, why were you trying to do an offer right now and try to get a full approval, then it's going to take, at least, as I said, a couple of weeks to get that process. And, we don't want the customer to have to wait. So hopefully that kind of makes sense.
Okay, any question?
Yeah, any questions, comments, feedback? Yes.
What is the from fee you mentioned that average, upfront fee,
Yeah.
right? Yeah, the upfront fee, which is the credit report fee, and then the appraisal fee. This belongs to upfront fee. So how much is that? The credit report fee around $80 is something, and then the appraisal fee should belong to the purchase price. Yeah, purchase price will be maximum is around 800.
But I think what her comment is, how much does the customer pay upfront, regardless of what the property is, right?
Yeah.
So our minimum fee is like 600. I think 690.
690.
Yeah, 690.
690.
So they will pay that. It goes into like think of it like a trust account, for the customer. Let's say the transaction did not go through for whatever reason, and the customer want to buy another property. We can either A, refund that money back to the customer, or B, we can transfer what they paid into the new transaction. So the customer doesn't have to pay.
Even though you made a appraisal report, you still refund that money?
No, once the appraisal is done, that fee goes out to that property. We have no control over what the appraisal will charge.
Yeah, because
the
fee
service already
paid to
done.
the third party.
Correct. And they don't work for us. These appraisers, they're not staff appraisers. We actually, they're independent contractors that we partner with.
So the upfront is only for the appraisal.
And
credit report.
Credit report. It's a subprime. Yeah.
What is your origination fee?
The origination fee of conforming around 1,300. On the jumbo around is 1,400. But sometimes based on the different state, like the Las Vegas, maybe less than, but I need to check every.
Yeah, it kind of varies a little bit.
Yeah, maybe a little bit lower.
And
This is California.
And I think you brought up a good point. Is where Clara is a little different, or actually our loan officers are very different. Is they're not 1099. They don't work on commissions. They don't work on making an extra eighth a point or a quarter of a point. To her, she's W-2. So we're a standard employee. So it's in her best interest, in our best interest, to help the customer get the very best rate and progress.
Yes, yeah, I'm not, and
There is no on the I was going to say HUD, but on the closing disco, you're not going to see a YSP type of thing. There's no premium to pay to any loan officer. So we're very, very transparent with the customer. We show them exactly what it is.
Yes. Thank you, Frank.
Any other questions?
I do.
Yeah. Go ahead.
So the transaction, everything's on the computer, right? So you give the customer computer password and they go through the computer process of application and all kind of things.
No, this is I will send the link to the customer. The customer will fill out the application online. Then they will create their own password.
Correct. And then they have to, but in the many cases, I don't know you or anybody, my customer doesn't know how to operate computer. That's the problem.
Yeah, that's just I can help. I can help. I
So
can
they
face to
bring,
face.
you
Yeah.
will go there to help them, or they?
I
should-
cannot help them to put it. I will say like a face to face to take the application. I can do the phone.
Okay, instead of go through the computer.
Yeah,
system.
they have two ways.
Yeah,
I'm
two
sorry,
ways.
I don't want to interrupt,
Sure,
but
go ahead.
yes, you could do the traditional ways of.
Traditional,
the
right?
traditional.
Or on the phone. However, to expedite it, if they want to do it online, Clara can do something called copiloting. So that means when the customer's on the computer, she can see what the customer sees. But she cannot type it in for the customer, it's the customer's application, so customer have to enter. But I get it, sometimes
Yeah,
customers are,
because
oh my
we
God,
had
this-
a really.
yeah.
I know.
And-
Understand.
Yeah,
I don't know. which is
yeah.
right.
We actually partner with a company called Lend. They actually created our online application. Is if you know like TurboTax, it's very similar to that. It asks you like point blank question, very simple. It doesn't give you like a 1003 application and says, okay, fill it out. They're like,
Yeah,
oh, what are
yeah.
you looking at? It's literally question by question, screen by screen, make it very intuitive for the customer. The reason why we like to use online access is because let's say if my money is sitting with Charles Schwab, for example, I can actually through the application log into Charles Schwab, and then it will hold the data. So the customer sometimes doesn't even have to give us bank statements. Everything could be remote. Like we have customer that works for some larger corporation. We actually pull up their income documentation and their bank information all in one place. And so literally the customer just sign some disclosures and they're ready to move forward. So
Yes.
it's a pretty quick process
Yeah.
depending on the customer.
That is true, but they not real estate broker or loan.
Oh, yeah.
I
Some
can
older
help.
people, they
Yeah.
just.
Yeah.
I speak Mandarin, Cantonese.
Yeah.
Something that-
Very
So
good.
I can help.
I can help.
And she's locally here. So she's one of my loan officers that's covered the San Diego area.
Also, you mentioned you do have a program for people who doesn't have any credit record. No,
credit.
like a
No,
like a new
QM.
immigrant.
Non-QM.
Non-QM.
We do, no, we right now, so here's the thing, we don't really do foreign national program. We do have a foreign national program, but it's very, very limited. And I can kind of say where this is from an Asian country or things like that, we really don't do those loans. I'm being very honest with you. But if you're a Canadian citizen, they're buying a second home over here, or vacation home, things like that, we will look into it because it's still a foreigner, right? But they do have credit report from Canada. Sometimes we will be able to work with those. But coming from other part of the country, or kind of in certain geographies, we actually don't do those. We used to a long time ago, but not anymore, unfortunately.
We need a broader national credit report. Very hard. Yeah, we need more information, but normally the customer, they don't want to provide.
But let's say we have a customer that they lives here, they're a US citizen, but they moved over to a different country, let's say, could be China or whatever it is, and they're a US citizen. Those loans we can do because they're a US citizen, but they're just residing and work in a different country. As long as they file their taxes here.
Yeah, they will file this 2555, and then we can do it.
Good questions.
Any question? No. Okay, I don't want to waste you on too much time. And then right now I have a raffle ticket. So you have this.
No.
Okay, can you? take it?
It's the lucky person.
Okay.
Tatiana.
Yeah.
Okay,
Yeah.
good.
This is a great news.
Congratulations.
Thank you. Yeah.
You want to go?
No, it's
Yeah, one more.
Come on.
Big changes.
Oh, Gus is not here, so. What's it,
You have to be
give us-
present.
Yeah.
There you go, right?
Yeah, because I just now he said, I'm not here, please. No, he has to be present.
No,
you have to be
Okay,
present.
Yeah.
Come on.
Okay, so excited to be more.
Yeah. All right.
Thank you.
Thanks again for giving us opportunity to speak over here. Today is more of a preview of some of our programs. A lot of our special programs, we actually have a specialist. They can actually talk about it, so we can either do Zoom or in person or work. But feel free to let Clara know to see how she. Michelle, thank you again.
Thank you, Michelle.
So the program is for 1 to 4 units, right?
Yeah, 1 to 4
1 to
units,
4.
yeah.
Oh, anything 5+, we do it.